Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of personal advice. Go Market Securities does not know your personal scenario nor your personal financial goals, and therefore none of which relied upon as any form of advice at all. It is just general in nature only. Rio Tinto fires the gun. They always do these days for us, watching bigger companies on the ASX earnings season. And it did happen overnight in London. And I need to point out, it's really disappointing. There's no way to beat around the bush on it. A 34% decline year on year on numbers, coming in at $5.7 billion for earnings overall. EPS came in at 177. Both of these numbers were a miss. Not only that, they did slash their dividend down to 75 US cents a share. Now, need to put a caveat to that. That is still the third largest dividend they've ever paid, and that needs to be put there very clearly. They are not a dividend company, they are a growth company, they are a mining company, and for that reason, although the dividend is attractive to some people, it is not the reason to look at it. What was more interesting was the three parts of their business that they champion, but also have had a really tough time. Iron ore, significantly below what was expected, but that was already factored in. The production report they gave us about 3 weeks ago told us that. Copper, that was disappointing. Overall, the numbers were lower than expected, and that has probably also been why they got dragged down on the open over in London. The numbers were not as strong, considering how robust and how strongly worded they have been on that copper division. And then there's the headline, the 1.7 billion Australian dollars, or about 800 million US dollars, numbers on their aluminium plant. And it shows that the government policy here around carbon and carbon credits and dirty industry, aluminium refinery is a very dirty industry, is going to make it tough for Rio. And therefore they're going to have to evaluate what they're going to do with it. That is the clear takeout. I mean, if you're having an impairment of that larger number, there's things that are going to be asked and about whether or not it's actually worth the overall numbers it's doing. So watch that space. Over the numbers that also matter is China, and the China talk at the numbers that came out after market and then during the actual overall speech they gave to shareholders was interesting. Jakobsen was sanguine, which is not normally what Rio has. I mean, they are very, very aware of the fact that there is a growing sign that the demand for steelmaking products are going to be very, very soft in the near future. Now, that may be a little bit overdone, considering the last week we've seen the Chinese government start to change it, but their view is that China's demand story is not going to be as robust as what it was in the glory years of 2021 and 2022, and that overall the story is softer than it is. And that explains why Rio fell 3% in London and is going to do something similar here in Australia. It has started what was also likely to be a final sign that the cyclicality of 21 and 22 into materials is probably at its peak, and it's now going to unwind as well. Watch this space. It's a good earnings season to start with because it's going to be probably a theme we're going to see on a regular basis.